Ladies and gentlemen, it's good to be here tonight. We have a little bit of market madness, which is apt for what has happened in the markets over the last more than just a week, but boy, especially this week. It has been, and I hope for most of you guys, you're just seeing some great green numbers. You can see that, of course, Tanner, my friend, on my it's left, but right on this side, he is wearing green today. Why are you wearing green, Tanner?
Because mainly for SoFi, but there's a lot of very bullish companies today, and I'm feeling very green.
And I too, I think that this is green. I'm a bit colorblind, but it looks greenish to me, so I'm going to call it green. It's certainly not this color. We have not seen a lot of that color recently, so we're going to talk about tonight some market trends that we're seeing, just market overall, and some individual tickers. I know that normally we're doing SoFi Weekly. Tevis is doing a bit of traveling right now because he's filthy rich, right, Tanner?
Yeah, he's unbelievably rich, and so is he headed back right now? Is that what he's doing?
I think so.
It said
I'm
like
I'm
it's a
guessing so, but he could be
double-digit
going to
hour
Mars.
flight, so I mean, it must be heading pretty far.
He could be paying for a shuttle to go to Mars. I mean, like he has that kind of Elon
Can
Musk
afford
love.
it.
So we'll find out relatively soon. And if he has Wi-Fi on Mars, then maybe he'll join us for SoFi Weekly tomorrow. So, but no, we're in for some treat tonight, nevertheless. So one thing that Tanner and I were talking about in the just right before we came on the channel is a stock that you've had your eye on. You're not an investor, but you said that there were some interesting ramifications for SoFi. You want to take the lead on that, Tanner?
Are you? Is it up a lot today?
It's up a lot today. It may be starting to see some
Okay,
good
dude.
momentum.
Uh, yeah, sure. Upstart is up today 46%. If I just get out of the after hours here, you'll see that even once they showed off earnings, so they were around the 50 or so dollar mark, hovering between, sort of $53 and $57 a share. They showed off earnings, skyrocketed to $69 a share, big pullback, and then opened up again today, hitting 82.25. Unbelievable.
Yeah, it's that one's pretty volatile anyway. It's rate sensitive. It doesn't surprise me on a day like this that it flies upward. It'll probably retrace, but I mean, this is the stock that flew from 100 to 400 in no time a couple of years ago, and of course, famously had the analyst who was just a trader. Like he doesn't care what the stock actually does, and he was asked what they do, and he was like, "I'm sorry, I can't hear you. What did you? I'm breaking up."
I should
Uh,
find that video.
that was actually the top. It was hilarious. I've been feeling like some of these other companies that I'm in will probably have one of those moments. That's always a good sell signal. But yeah, right now people are buying this up. So you mentioned like you're not in that stock. I'm not in the stock. If anyone is in the stock in the comments, just post that. We'd love to see that. But you said that there's some interesting ramifications for SoFi. So what were you seeing?
Yeah, I mean, they even were mentioned by name in the earnings call as well. SoFi
Ooh.
was. So uh, Upstart is a company, unlike the analyst, I can explain pretty quickly what they do. They create AI models to assess a customer better than FICO and just income levels. So they try to understand a customer better and then sell that data, and will actually take an institution's money and originate that loan for the institution. Very similar to what SoFi just started doing with the loan platform business. Okay. But Upstart just recently got into this new product called T Prime. And essentially, Upstart has been doing very well with, very low FICO, low income individuals, and they found a good spread there. But now they're playing in SoFi's ballpark. Attract and acquire super prime borrowers, which is where the bulk of loans are being sold and originated in, because these people have a low chance of default, and there's probably more sustainable earnings here. So Upstart's trying to do a very similar thing, try to find more attractive borrowers, try to find them at cheap rates. do instant verification. So they're trying to win out on some of the additional features rather than just beating them on pricing. They want to beat them out on, time to originate and stuff like this. So that's how they're starting to get into this market. And, a lot of analysts were asking, okay, you're getting into Prime Plus. SoFi dominates here. How do you guys compete? And, Upstart has essentially said, yeah, this is where it gets really competitive. The margins get a lot tighter, but we believe that we can play in this space. And they didn't really have an answer yet because they just ended up joining.
Yeah.
But it really goes to show you that the term AI is so overly used, especially from companies like Upstart. It's like
Yes.
the stuff that SoFi is doing is the exact same. They bring on a heck ton of data scientists to try to find out how to better understand a borrower than just FICO and average income. They use a company called Nova Credit to help get a lot of cash flow information, and then sort of start the underwriting process from there.
And it
So
announced an extension on that too a couple of weeks ago. So that's an important distinction.
exactly. So it'll be very interesting to see sort of how they improve in their underwriting going forward now that they use Nova Credit's newest product, Cash Atlas. But yeah, so Upstart is skyrocketing on the idea that they said, hey, macro for lending is so good right now, and we are going out of the sort of tighten the belt mode, and we're going right back into, growth mode. This is SoFi's business. This means growth for SoFi. So people are sort of, putting the pieces together and saying, hey, if Upstart can go up 46% on the idea that they're going to be originating more loans than usual, what's stopping SoFi? I mean, SoFi's first quarter of the loan platform business did the high majority of what Upstart just did in their Q3, and they've been doing this for years.
So that said, I think SoFi has a long runway. This isn't SoFi Weekly, but we'll talk a little bit about it. Next year, based on quarter three results, I was thinking this before, and quarter three confirmed it for me that I think that they'll hit 25 next year. I thought they'd hit 20 this year, and I thought I was way wrong. I mean, they still could. It's crazy what's happening over this the last month. It's risen 50%. I really don't think it'll hit 20 by the end of the year, though. But no, they have fantastic tailwinds, and it's not just all in the lending sector, but that's really the biggest shift is when you deliberately don't really grow a product for a time, just out of caution, and then you're able to lend in a much better environment and sell those loans. It's a phenomenal combination, and people like it. It's still SoFi is a great opportunity. I didn't want to take profits on it. I did sell some covered calls, and I was like, you know what, I'm going to be okay if these are called away. And actually, I bought back some of those too because I'm like, oh, actually, never mind. But I let two get away. I guess I'll find out on Monday if they actually do get away. So just 200 shares are gone. Took some profits. It's okay to bank some profits. It might come back down as well. But I think that there's a long runway. And this is one of just a few names that I'm still looking at the market. The way it's ripping, a lot of the names that are in my portfolio, I'm like, I'm good with what I got here at these prices. SoFi is one of those, I know it's a lot higher than when it was in the sevens. It's still attractive to me. I'm not looking to add anytime soon, but I don't want to sell. So I took a little gains because I was forced to. That can be healthy. What about you? You taking some off the table, Tanner?
Taking nothing off the table. I don't think anyone expected anything less from me. I'm just going to hold.
Diamond hand, right?
Yeah.
Okay, so we'll talk some broader market stuff too, but I know you're not holding Upstart. What out of your portfolio was your biggest gainer this week? Or if you're not sure, just say what you think it might be.
Yeah, I mean, it's probably NVIDIA, just because of the percentage of my portfolio. But
yeah, well, I mean by percent.
I don't know what it would be. I'm not sure,
How
actually.
about I show you mine then, and I bet you can probably guess. This is my show. So, hey, they had earnings this week. Palantir did. They always tend to report earnings on significant macro weeks. They just do. It's crazy. And usually I'm very nervous for it. I'm usually not too nervous for it. This time I was actually nervous. They're going in, I think it was around $42. We can see, yeah, 41.76. Actually sold some covered calls at 55 and also at 59. Yeah, those had to be rolled. But I mean, if you look at this, it's up 42.17%, actually a little higher than that in the after hours as well. Yeah, this thing is ripping. And it's not just it's a combination of several things. Like one is they reaccelerated, like I was telling you and Tevis, a year ago when you're like, hey, 13% growth, this is terrible. I'm like, yes, but you see this whole strategy has changed. It's clear that the acceleration is there. And they've done it 30% year over year revenue growth. Now, should it be more at these multiples? Absolutely. But I mean, it's a business to business product, so they can only accelerate so fast. But that great results beat expectations all across the board, including raised guidance. Then they announced a $1 billion contract with the Navy this week. Not an extension, just a straight up contract. They announced a contract extension with Windays. They announced a partnership, I believe, with UPS, and there was a couple of smaller contracts as well. And it just people are coming out of the woodworks to partner with Palantir, and it's just so much news that it's hard to keep up with. Like if this is my only stock, just keeping up with the news from this thing would be kind of incredible. And I know there's a lot of AI names out there and a lot of people saying AI like this one's legit. Now, as far as the price, if it keeps running like it is, I'm probably going to let some, not all, but some of those covered calls be called away and take some profits. But it's one of those, like, it's the downside of the covered calls, but it's kind of good because I'm terrible unless it's just options and I have to take profit in taking profit. Like it's something I'm weak at. That's part of the reason why I do the covered calls. So, but I don't want to yet. Certainly not this year. But early next year, like if it's in the 60s or 70s, and like with this market, who knows? Like it could go up to 100. Like it'd just be like, is it justified? No, but
if
it could.
If it goes to 100, I'll short it. It's like it's crazy where this price is at. I mean, no offense to Palantir, but
in the short term, like it would not surprise me, for the whole market, because the market has been pumping just to take a cool off and a healthy pullback. And if Palantir is caught up in that, it could fall back into the 40s, and that wouldn't shock me. That wouldn't bother me. I think it's fairly justified with what they're doing, even though if you look at the multiples, you'd be like, oh, no way. To be mid 40s right now with what they have coming, with what they're doing right now, with who their partners are, and indication of very large future clients, like that are, I guess, technically not clients because they haven't seen revenue, but are in the pipeline. The pipeline is, I won't say exactly how, it's not like insider knowledge or anything, but there is a way. And the OGs, like in Palantir, that knew of Palantir a couple of years ago, they kind of know about this. You can look and see who is playing around with Palantir technology. And there are, I'll just say, there's one of the largest companies in America is in that. And many of these, I would say most of these actually in the last year have become real partnerships. So, yeah, I would be careful about shorting it, even at $100. You might be right, but like honestly, this is the NVIDIA of software AI. It's actually outperformed NVIDIA year to date. It's the second highest performing stock in the S&P 500. Fully justified just based on current numbers right now? No, but like I was telling you, the acceleration is clearly there. So be careful.
NVIDIA has grown at triple digits, and we're giving this multiple, which people are calling the NVIDIA of software, that is growing at 30%. It's mind-blowing to me. Like it can go to 100. Like that's the conversation now, is it's going to 100. It's like, I get a premium, like a premium valuation. CrowdStrike has a premium valuation. CrowdStrike's premium makes it look like a very cheap company compared to Palantir. Like I'm getting blown away now.
To be fair, CrowdStrike has had a lot of issues, and their valuation is nowhere near as stretch as it was at CrowdStrike's peak. Actually, if you compare the price to sales of Palantir to CrowdStrike in that area, it still has a ways to run. Now, I'm not saying that it will. I'm not saying it'll get to. I know it'll get to $100, but I think that'll be justified in a few years, like 3-4 years, versus where it's at right now. But we're in a type of market right now that actually looks at Palantir and sees what I'm seeing. They're like, oh man, yeah, she's a 10. Absolutely, she's a 10. It may be. I think it's getting a little bit ahead of itself. That's one of the reasons why, even though I did not think that I would sell any shares, and I haven't yet, I'm comfortable getting some covered calls called away, just because it has run up so much. I know where it's going in the next 10 years, and it's a phenomenal company. But there is a point when you're like, maybe I'll just take a little bit off the table and de-risk. So that will probably happen, like if it keeps running like this in January. So take off probably about 30% of my remaining position. So not a small amount. Yeah, that'll more than cover my initial outlay. uh, Average is like, net average with covered calls is in the sixes. So I mean, like that gives you an idea. It's a 10x.
T-Bill said he bought more SoFi and Palantir today.
Honestly, I was thinking in the 20s, I'm like, I could add some more Palantir here. In the 30s, I'm like, and I saw people buying it. I'm like, oh, these people are going to be hurt. And now it's like doubled. So I don't know, man. The one thing to keep in mind too, when you're buying stocks like this that have run up so much, is think about your goals. If you're a trader and you just care about momentum, this is probably the place to be, honestly. um, you know, Day trading or swing trading. I don't know. You do you. I don't not really in that world. Or if you're like a super long term, just buy it and forget that you own it and look back in 10 years. I don't think it's a bad time to buy Palantir. If you need returns in the next, 2 or 3 years, be careful with that, man. If I didn't own any of it, I don't even know if I'd be buying it right here. Uh, in the 40s, yes, no problem with that. If I own no Palantir at all, but man, it's almost 60.
Would you
It's a
rather
great
buy
problem to have, though.
Palantir or SoFi here?
Pardon?
SoFi? You'd rather buy SoFi here?
Yes. Yeah, I'll say that.
Yeah.
Usually as far as returns, I'm looking. Palantir I want to own longer than this, but I'm looking at like 5 years out. Where do I think this company is going to be 5 years? Because that's easier to tell than 10 years. 10 years, companies, countries, the world can change so much in 10 years. Like for the next four, we know who's going to be the president of the United States. So we kind of know what the policies will be like. We have a guess as far as reaction from all the Trump stuff, like what the world might be like, and some of the pressures that the world might face. And so that gives the market a lot of certainty. But like 10 years from now, I mean, we're just guessing, honestly. And we're up to a certain extent with five. So over the next, I mentioned this on SoFi Weekly. I put this on X as well. When SoFi is trading in the sevens, that out of every single stock that I track at all, that's like 50 or 60 stocks, including ones that I own, SoFi would outperform every single one of those, from the sevens all the way through 2025. There are just such ridiculous and obvious tailwinds that are not fully priced in. I think even if it was just going to be neutral in 2025, SoFi would be a little undervalued here. I think it should be trading like maybe 14 or 15 based on that, probably 15 on that most recent earnings. Like they really just had a great earnings. And the acceleration is very, very clear. The one thing that's not is a tech platform. There's hints, but there have been hints for a while. If we don't see that in 2025, I'll probably think of SoFi as like a really great trade that I maybe bring down to like 2 or 3% in my portfolio as far as a long-term position. But I mean, we just have to see. We have to give it time. At that point, it would have been 2.5, 3 years. I'll be like, okay, yeah, tech platform. It's just a minor, nice extra piece for SoFi, and it is a nice piece. But
you know what's so funny is like the growth rates of the tech platform. If you were to look at it from, and I mean, even a bunch of companies that are even valued as financial tech platforms are growing slower than Galileo's tech platform and have 3, 4, $5 billion market caps and growing, or have roughly similar numbers of revenue, 120, 130 million dollars a quarter. So very, very similar. Yet, holy crap. Willy Wonka gifted 10 memberships. Thank you. Thank you so much. Always delivering treats to all the SoFi members. Thank you. But what was I going to say? So one thing that I think is crazy is the tech platform already is doing its own thing. It's a slower grower. If you were to compare that to, slower growing companies like PayPal, the growth looks amazing. But whenever you put it up to the financial services and stuff like this, it makes it look terrible.
Yeah.
If
And I mean, like, by any measure, like as far as our expectations, it's underperformed. I don't know that anybody holding SoFi is like, wow, the tech platform's awesome right now, because it's not.
No,
Uh,
no. But where do you put something like the loan platform business, which is brand new, should be getting a multiple higher than Upstart's?
yes,
Like, because
it won't, but it should.
it should, because like Upstart, by the way, is a worse business than SoFi's loan platform business. They
Yeah,
do loss sharing agreements, they do financing commitments, they do co-investments. These things suck for what Upstart wants to be. They want to be a tech platform, but yet they're taking balance sheet risk. So why aren't they being priced like a bank? You know,
yeah,
SoFi is not doing any of that, and yet they're already originating close to what Upstart is doing. They just originated 1 billion in Q3. Upstart last quarter did like 1.1 billion or 1.2 billion. Like at its highest, Upstart went from 1 billion to 2 billion to 3 billion to 4 billion. Like it's 4 straight quarters of origination. So doubling, extra 50%, then extra 33% on top of that. And then that brought them up to $400 a share. SoFi can do that. They have more members than Upstart has ever had, and they'll use that money to acquire more members. I think that we're really going to be in a place where we could see a million new members, potentially on a consistent basis.
I think that's certainly possible. I'm thinking that it is going to be in quarter 4 as well. Like I predicted that at some point this year that they'd hit a million. If they don't, like 900,000, fine. I'm not going to be like upset with that at all. But no, they have just so much going for them even now that I'm very happy to continue to hold those. And the funny thing is, like the way my portfolio is constructed, I have like an individual account that's mostly Palantir, like it's more than half Palantir. I have a Roth, which used to be my smallest out of all my positions. I have an IRA, and then which I use do some of the wheeling in, and then I have an account on Webull as well. And that's it's not too big. It's like 50,000. But with the Roth, like it's fun because it's actually overtaken the Willing account. Just because SoFi is super concentrated in it, and also some on Webull. I got some in my other accounts too, but it's like half of my Roth just because it was so small. And most of those are options. The actual stock of SoFi I put in other accounts because I don't mind holding that long term. Although buy those 200 shares. So yeah, just from the way to SoFi, can it retrace? It absolutely can, but it's been a crazy week. So what? Let's talk about market reaction overall, rather than just focusing on individual names. Did the outcome of this election, as far as it relates, not so much to who is elected, but well, I guess like first, let's start there. You're a Canadian citizen, so you're not supposed to vote the United States, and hopefully you didn't. But I mean, who knows these days? But I was thinking that whether Trump won or whether Kamala Harris won, that it would be a long, drawn out affair, relatively close. They'd still be counting at this point. Probably there'd be courtroom battles, and the market hates that kind of thing. It hates uncertainty. I even took some gainers off the table. I took some of my last remaining Robinhood options. That's a mistake, sadly, but I took some of those off the table. I did buy some stocks, so it ended up still pretty good. But I figured I'd just de-risk just a little bit, not much. And I think a lot of people did that. How quickly the election was resolved, did that take you by surprise at all, or did you not really even think about that?
I didn't give it too much thought into how much it surprised me. Like I am a Canadian citizen, so I follow, but from the sidelines. Um, I think the way that it came out from a capital market perspective, I was fine with. Like a lot of the actual like policies that you guys have to potentially deal with is not something that affects me,
Oh
but
yeah,
the corporate tax rates and a lot of the benefits to the financial markets in terms of a little bit less potential regulation risk and these sort of things are definitely positive for stocks. Similarly to the way that Anthony Noto looks at it, that for his business and for the economy, he was hoping for a Republican administration. It definitely doesn't harm me that that was the case. So, uh, yeah, I'm happy with the way that it came out. But in terms of the actual timing and everything like this, I didn't follow it as closely to be like, oh wow, that one swing state went this way versus that way. I don't care.
Yeah. Yeah, you're not an American yet. One day we'll
Yeah,
get you there.
I'm hoping. Well, actually, I'm not going to get into Canadian politics, but we have our own problems, and I hope that we address that soon.
But yeah, as far as the market reaction now, did that surprise you as a result of the election? Like took me. Thankfully, I'm mostly invested in. I have some cash, but like most of it's been deployed at this point. But this took me completely by surprise. Hence, some of my covered calls getting absolutely obliterated. And I'm like, Okay. So what about you? Was this like, oh yeah, this is expected, or what do you think about the reaction?
Yeah, I don't think that like I think some people are looking at this and being like, "Oh, this is overly euphoric." I don't think so. I don't think so. I think uh, markets are pricing in a certain level of growth over time, and then now they see more growth. So valuations might look in the short term extended, but if those policies come to fruition, that it might be similarly fair valued as what it was before. So no, I think that there will probably be a lot of more pricing in to potentially do. Like, um, yeah, bull markets are very long, and I think people get caught up in uh, transitional times like this, and they go, "Oh, well, I'm going to wait to get in," and they can spend years on this idea that there's this large drawback when most of the time the correction that you're actually looking for might not even bring you back to where you were going to hop in the first place. And so this is why DCAing is probably the best in that times like this, some people think is euphoric and stupid, and other times people just have to enjoy what's happening in capital markets, and that bull markets are a lot of fun and a lot of people are making money.
Yeah, I think it's a lot of the move, and maybe not every name, like 40% and up start with those earnings. I don't know. I don't track that one, but a lot of the moves feel fairly justified. For one, we got basically instant election results that are very, very clear and decisive. And the market, it has certainty now. It has certainty, for at least the next 2 years. I mean, the house could flip, but the market actually likes gridlock, so I don't think that bugs them at all. But it craves certainty, and it has it now. And with Trump, no matter what you think of him or not, like he put his policies out there as far as what he plans to do, so the market has a clear idea of what to react with. Versus Kamala Harris, and I don't blame this like wholly on her. Like she was just kind of thrust in because Joe was removed, and it didn't seem like she had many of her own positions or convictions. But it seemed like every single week there was changes and tweaks, and so I think had she won by a landslide, I don't think we'd have the same kind of boost. Partly because of that. Now the other thing that I see too. Did you notice? And I saw Nala post the name of it. That's what I've seen some of my conservative friends say is the Trump. What is it? The Trump effect. I lost that comment.
Okay.
Yeah, the Trump effect. Did you see the reaction of some of the other areas around the world where there's global conflict and issues?
I saw some of it, but I don't like the way that where this conversation is going. I'm not going to have a lot of input in.
So yeah, this won't be politics, but I'm just saying over the last 4 years, well, I'd say more like 3 years, we've had the Russian-Ukraine war. We've had now the Israel Hamas conflict, and that's gone on further, and I think longer than most have expected for both of those. We have Houthis, I believe I'm saying it right, down in Yemen, basically shutting off a lot of the Red Sea. We've had pressure from Putin on, like, as far as BRICS on the U.S. dollar. Every single one of those, there's been a headline in the news that's basically indicating that all those positions are softening and changing. So, if as a result of Trump being elected, that the world becomes a calmer place, I know many expect the opposite, and it could well be the opposite. But if that's the case, like these headwinds that the market has been facing, although for some of it, it's been ignored. Normally do a little bit of blip here and there, but I mean, like it could bring in even further certainty and peace and calmness. And as a result, I think the markets will benefit from that. Now, one thing that I'm kind of curious about is, the impact of tariffs. If that actually happens under the Trump policies and everything, I would have thought that the move would have maybe been a little bit more cautious given the impact of that on consumers. But really, time will just have to tell on that. So, no, I'm not asking you to give like political opinion and all that stuff. Just it seems like the market loves certainty. They got it. And on the global level, some of those conflicts that are just horrific may hopefully be resolved. I hope so. I hate seeing people get killed, no matter who it is. It's terrible. So
Yeah, I mean, I'll definitely speak on the certainty part. Even if we got bad news or something along these lines, markets still love that rather than uncertainty. Like the list is good news is best, then bad news, then uncertainty. But any ideas or thoughts on Robinhood?
yeah, I was going to ask you about that next. So let's pull up a chart and just show people what we're talking about. And they had some news this week. Let's share this here. In this, I'll do a 5-day. Thank you. Yeah, over 5 days, it's up about 30%. Started around 23 and some change. Of course, I sold some covered calls at like 27 or 28. And yes, I still have some shares. I still have some options. It was mildly annoying that it rolled up like immediately this much and throughout the week just continued to thrive. Um, Robinhood, like, okay, where do we start? Let's talk about the election stuff as it relates to Robinhood because it very much does. They have a new product, futures contracts, that they launched not even 2 weeks ago, and so they allowed betting. Now, I thought maybe they'd get $1 million, maybe a little bit more off of that. How much did they get, Tanner? At least,
Probably just around five point something million.
just
Yeah, just. But I mean,
not bad for 2 weeks.
They said over 500 million contracts were signed. They get a penny per contract.
Yeah.
So how just over 500 million, we do not know. But yeah, incredible start. Incredible start. Especially whenever you look at like Kalshi and see how many contracts that they did on the election. Like,
Oh, yeah.
Robinhood took a huge percentage of what they could have done for being around for a couple days. It's nuts.
Oh yeah, yeah. I mean, like the user interface, I didn't use it. I actually somehow closed it and I couldn't get it back. The last 2 days of the election, I was so annoyed at myself. I'm sure I could have, by contacting customer support, which has been very good. But no, like it just shocked me that how rapidly that was adopted. And the user interface, like I went all the way up to the point where if I hit one more button, it would have been, a contract there. Did actually out of you don't have Robinhood, so I was going to ask you if you had access. I'm really curious if I'm guessing it was just U.S. markets, but I'm curious if those in the U.K. Were able to access that. I don't see why not, but yeah, I don't know. Like, I don't think that'd be a large source of revenue. I know Polymarket does that sort of thing internationally too, but no, that was a shock. Now, do you think this is the last futures contract?
Come on.
Of this year? Let me do of this year.
Of this year. Wow. I could see them rolling it out and it wouldn't be a surprise to me. Because it's my understanding that they're using an extension of Interactive Brokers.
Yeah, it's Forecast X, who, if you look on their website, we can maybe even pull that up. Have you looked at their website just to see what they offer?
No. I thought they used a software called IBKRS.
Well, their partner, maybe they do. Forecast X is the other side of this. They are getting a penny as well on the contracts, and so this is what it looks like here. You can see it's all political, mostly political. So, will the Democrat Party win the majority? I don't know who's voting yes right now, but no, this is expired. It actually expires after a little while. So, a lot of political ones. There's economic indicators like CPI. Fed fund target rate. I saw some Singapore stuff, U.S. national debt, environment.
So I could see stuff like Fed funds rate decision contracts coming out for, December, right? We have, or yeah, 40 days until the next one. So something along those lines between then and now, especially if you already are using the APIs from an existing company and they already have those available, like what's stopping them from continuing to push out new contracts? I can't imagine a lot. But it's how fast that they want to roll it out.
Yeah, I know a lot of these just, I mean, like open interest 20. Nobody cares about this. So I hope and I think that they'll do it, in a way that it'll just be those compelling things that people want to bet on. And I thought that they might pivot this towards sports betting. On that, there might be some additional regulation. I'm kind of curious. DraftKings didn't actually post a very good earnings. And as far as this partner that they have here, they don't do any of this sports betting. But I was thinking maybe the next major event, if they want to go the sports betting route, would be the Mike Tyson, Jake Paul event. I know at least a lot of people here in the States are interested in that one. So,
yeah, I mean, there's so many ways to go with this. And the one thing that I really like is like Kalshi's doing this great and they offer so many different contracts, but essentially they're trying to create financial markets by setting pre-bound like decisions and only having a yes or a no on really extended contracts, which I just think is like something where if you're betting on the price of Bitcoin or Ethereum or something like this, is probably not your best outcome rather than just betting on those things. But what I love about Robinhood is that your money's already there. Why are you storing money at Kalshi if it's like, I'm sure their deposit inflows from the election and then withdrawals after the election was astronomical. So what I love about Robinhood is it's all in the platform and you can take that between either, making money on the like just checking account product or cash management account, and then move it to stocks, potentially bet on an investment, bring it back, use it in your credit card, everything along these lines. I'd even love for SoFi to do this, but they're not going to. And I can almost guarantee that because it's got betting in the name and it's just not getting your money right. But for Robinhood, they are kind of taking a different mission statement, right? What you want to do with your money, they'll let you do with your money. You're an adult, you want to gamble it away, that's fine. So yeah, I think that this will extend and expand much further.
here's another one too. Of course, we heard a couple of weeks ago. I believe it's a New York Stock Exchange, not that is looking at doing near 24-hour markets in Robinhood's footsteps. And Robinhood, like especially with election night, they like the volumes have been really really high. I saw several million shares trade on Tesla alone during election night. I can't remember what it is right now, but it was a few million at least. And yeah, they had 11 times their average overnight. They've been benefiting from that from China as well when there was interest in China because people wanted to get in that action before the market opened. And it's election night, like we just saw it. Like these stocks just kept. I was following the election coverage and I was following stocks, and it just kept ripping higher and higher and higher. And I was like, okay, not all of it's going on Robinhood, but there's a lot of it. The other really cool part of this is as products like this make the 24-hour markets more accessible, and of course, as there's more people trading, there's a little bit higher liquidity and less slippage. But there are people that were asking me is like, how do you see these charts? How do I trade in the there's going to be new Robinhood clients that come over solely because they're like, it's not fair that I don't have access to this kind of market on my broker. I want what they have. Fantastic. I mean, there's just a lot going for Robinhood. This isn't the only piece of Robinhood news. you see the stablecoin news?
Yes, I did. I was wondering where you're going with that. Global dollar, baby.
Yeah. Take the lead on this one, Tanner.
Okay, give me 1 second. I'll just bring it up because I wasn't expecting this.
All right. So as you're bringing that up, there is, and it seems to be a bit of a stablecoin race. Circle, that's USDC, which is a very good stablecoin pegged to the US dollar, has been seen as the leader. Tether has actually had some headwinds just because they are very sketchy. PayUSD is PayPal's prudentially regulated stablecoin, also a partner with Paxos, just like this one. And then we have the Global Dollar Network being announced this week with all those partners that you see. Robinhood is in this mix as well. So it's not their own stablecoin, but it's a partnership between these companies. And these are large names in the space that are adopting this. So
which is
as a
even
PayPal
better.
shareholder, I'm like torn, but I'm a Robinhood shareholder too. So yay.
I like this even better. The one thing that is funny is that Paxos just has their name on all of this. They're the real winner here.
I mean, no kidding. Yeah, they are.
Right. But with this, I do think that it's important for stablecoins that they hit some level of scale. Like, so Circle, they're dominating, they're doing fine, Tether's doing fine. But in order to get big, it's hard for new players to come in, take advantage of these systems, but also not just hold another company's stablecoin or something along these lines. So Global Dollar is putting a little bit of the ownership back into the stablecoin network while still benefiting off of sort of transitioning from regular US dollars to being on blockchain, which can save you a lot of sort of transaction fees and these sort of things. Time to settlement, if you're sending money or something, it'd be instant. So but Paxos is the actual company that is facilitating all of this. Robinhood is going to benefit from it because, well, they transact a lot of dollars. So
Yeah.
yeah, it is quite interesting. It's just whether or not, like, who wins, because scale really matters here, you know? So
And I still like how the PayPal stablecoin slots their ecosystem. If they, how it's basically redeemed to Zoom and how it can be used for margins for cross border payments or in daily commerce. But there's a ways to go, and there's always been a risk. Like I've seen that as the extreme bear case, not bear case, bull case for PayPal. But like the highest percentage I've given it is like 25% chance that it actually scales like that, which is high. I think it's the highest out of any potential player to actually integrate the stablecoin in daily purchases on a regular basis for average consumers. This could be a challenger to that. I think the direction, and we'll hear in December with Robinhood and their investor day, there are some very interesting potential use cases for stablecoins. Like stablecoins always going to be $1, so you don't have to be like, oh yeah, I'm going to buy this and it's going to pump to the moon. It's not that kind of crypto. But I mean, there's the features right there. And the way that Paxos is backing these, and I'm sure, I think that it's being audited by the same New York Commission that does the same thing for the PayUSD and the other state USD stablecoin that Paxos has as well. So really good technology, and can't wait to see this used rather than those things that are in your wallet. I mean, like you have the Canadian version, which is even worse, but like who wants to deal with this kind of stuff,
I don't even have any of those in my wallet. I'm honestly, I'm a fintech investor. It's because I'm also like a very big fintech user. I barely even have cards in my wallet now because it's all just on mobile, just tapping. So this is sort of the idea with the Global Dollar Network. You join and you don't have to pay as many fees. You'll also be part of that revenue mix. Obviously, there's still issuer revenue, and Paxos is going to make their bill. But Robin, you can split in these fees, and that'll be good for them as well. What's it called? So not just stablecoin market is Robinhood benefiting from, but they're also just simply benefiting from crypto markets in general.
Oh yeah. Yeah, that was a real weakness in quarter four. I thought that September numbers would come in about where August was, and that was a drag. Between that and the contra revenue, I thought it was guaranteed that it hit 40% revenue growth year over year. 38 contra revenue and a combination of that and crypto drag, did it in. A couple other factors too, but no, it's just there's a lot going for it. I'm very glad to be a long-term shareholder. There's one more, if you throw this up, that I noticed this week, and you may have noticed some other Robinhood news that you want to share too. Even though they're launching products like the futures contract, and people are like, oh, it's so degenerate and everything, they're making money off of it, and people want it, so that's fine. It's safe. Robinhood retirement accounts is, of course, a big pivot that they really focused on over this year. It's up 2.5x year over year. Assets under custody are up 10x. You can see the charts there. Now has over 1 million accounts, over 12 billion assets under custody. So another piece of good news there for Robinhood. Anything else you noticed for Robinhood this week?
Nothing necessarily from Robinhood other than the fact that, you know, they dropped on their earnings and everyone freaked out, and now it's like it never happened. And
Yeah.
the stock is back to new 52-week highs and no one cares. It didn't change the thesis at all. Okay. Like Roy said, contra revenue came in higher than expected. They had a regulatory accrual that ended up making them miss on EPS, but they are still taking the largest share of millennial and Gen Z, wallet share and investing, and they are going to be a bigger part of the workforce. And the great wealth transfer is also happening. None of that is slowing down. It's probably accelerating. So I did see a message from Jeff. However, I think you might see this in the chat. I wanted to talk about, but it's in regards to SoFi.
Ooh, we already talked about that one. Too late now. So, no, we'll talk about that real quick. Yeah, I see now my messages are not posting to Tanner's. It's because Tanner has censored me. No, not really. I have my own channel, so we're doing a co-stream. I don't know if there's a way for my comments to show on yours while doing this. That may
I think
be
you just click on the bubble and you click all. It says it's only posting to yours.
Okay. Don't know where that is.
Beside the post a comment on your name thing.
Yeah.
No?
Nope. Have to try that some other time. But anyway, barbecue, send me a message on X. Maybe that's the case. And I'll be glad to send you that Tesla referral code. So I am seeing your guys' comments. I just can't reply for some reason.
Jeff said, let's talk about SoFi hanging around 1454 for the 800 million in options they have. Do you want to talk about this? Do you have, do you know what he's referring to and why he might be potentially mixed up? Because it's written in such a way that I'm getting lost in what he might think is the 2029 convertible note and cap call transaction.
Yeah, I think that's what he's probably referring to. I mean, like, I suppose some of those wouldn't be convertible if SoFi was going to remain very low for a long time, but that's terrible for everybody, honestly. I don't think that full amount, like there's a limit. So they hedge against the potential gains. Like there's basically only so much people can gain from it based on the way that they hedge. There's only a certain amount that they can hedge against as well. So there is some dilution from the senior convertible note. It eliminated a lot of debt that SoFi has, but as a result, there will be some shares issued out. And ultimately, we as shareholders want the stock to rise. It likely will. Certainly, if nothing else, simply because Anthony Noto wills it to by midway point in 2026. Not really, but there are some performance stocks that they'll be given, Chris LaPointe and a couple others too. No, like it's. I don't think it is that full amount. Correct me if I'm wrong there, Tanner.
Yeah, can I clarify some things? So, so there's a couple of numbers that are buzzing around, but we have to understand how this works. So, SoFi at $7 ended up writing covered notes on SoFi for $9. So already they were not going to see any dilution between $7 to $9. That had already passed. The 1454 has to be is in reference to the capped call transaction, which SoFi essentially bet on their own stock price and said, hey, we think that this stock is going to go from 7 all the way up to 1454, and we are going to cut off the amount of profit that we can make. So that's the capped part of the capped call. And so that will stop at 1454. Okay. They say in their notes, any amount of converted notes, we are going to cover in cash. It is not their option to take stock. It is ours. We get to decide whether it's cash or stock, and we're going to choose cash, and it's not going to be dilutive. The 2020, they are so confident in this that the 2029 convertible notes do not count in their fully diluted share count. They do not count it as dilution. Okay. So what this means, this is good and bad for SoFi. One, once 1454 happens, SoFi is going to make the absolute maximum that they can make from their call that they had written on their own company. Okay. Which is going to protect us from a lot of dilution or a lot of the cost of cash settling the convertible note, but not all of it, especially not if the stock continues to run. So after 1454, that convertible note becomes dilutive. Okay. The problem or the resolution is that if it's above 1454, who's going to care about dilution? No one, because whenever they wrote it, it was 7. So are you really complaining after a double? No. But that being said, all the numbers are sort of mixed around. People get these these are two separate transactions that happened at the exact same time. So 800 million was the size of the deal. The 1454 is not their ability to convert at that price. That's just when that's when our call is at maximum profitability, if that makes any sense.
Yeah. No, that's helpful. The senior convertible thing, like I never feel like I feel like I have a grasp of about 90% of it, and then 10% is just like lurking in the shadows. I'm like, I so I never really feel like I'm fully confident in what I say about that. So, including like the day that it was announced, I was like, oh, I think I got this. It's like, no, I was completely wrong.
I
Then 3 hours later, I was like, okay, I've got it now. Nope, completely wrong. So it's
I had
but
I had a re-education of it because the stock has just skyrocketed. So now it's coming back
oh yeah.
into conversation. So I've got a couple people in my pocket that I always reach out to be like, hey, what does this actually mean?
It has helped me though. Like there's been a bunch of names over this year that have followed, and some that actually did it before SoFi as well, that issued their own senior convertible notes just because trying to get long term debt at the certain in interest rate that they're at right now, like it's just very very painful. So Noto guy, never heard of him.
Yeah.
So lad, see you in December, lad.
Yeah. Yeah. I still haven't booked my flight out, but I got to do that
Oh
soon.
man, yeah, you got to do that. Did I don't know that we're supposed to say where it's at, but did you see the location?
I did, and I got really excited.
Yeah, I told Ahmed like we were doing a stream on that or something else, and I asked him, "Is like, hey, did you see where it's at?" And he's like, "No, is it somewhere special? Should I know this place?" Click on the picture, you will recognize it. So
I'm gonna be on that picture.
yes, and
How great!
we can say it's a very famous. It's in New York, so you guys can hypothesize, but
I think
not.
some people from my chat are gonna figure it out because I think I've told them that part of the
Oh yeah.
story.
If they put two and two together, that's fine. So I don't think it's like some great secret, but I'm excited. I'll be taking pictures, I'm sure, the whole time. So
Yeah.
uh,
Yeah.
yeah, that'll be fun. What else have you been watching that has like stood out to you in this? Because it feels like to me, like to take a step back with the market, we're not quite at like 2020, 2021, where it felt like it was an everything up rally, but it feels like one of those could be coming like over the next 2 years. Not like this week. This week will not happen every week. It's probably going to be the best week. I mean, it could be the best week in the market for like the next couple of years. But I'm sure we'll get a pullback at some point. But man, things are just looking so good right now. But anything else that stood out to you other than just this general wave of stocks moving forward and everything being nicely green, other than just a few names?
It honestly just seems like delayed from where I thought that it should have already happened. I've been saying like for years now, we are going to be in the roaring 20s. And now you're starting to see this sort of phrase come back. I'm seeing people use that again. And I'm like, yeah, that like it's so funny whenever these trends start getting created and people talk about AI and then we sort of settle with that and then everyone forgets like I don't know, like the building never stopped. It's the same thing with like crypto and everything. It's like people focus so much on the price, they don't think about the actual technological changes that these sort of things have. And this is also why I still give a lot of credit to people like Kathy Wood, is because she's honestly so optimistic, but never forgets the end goal. She trades like shit. I'm sorry, Kathy. Like you don't even bet on what you believe in, but the big ideas thing is happening. Like we are seeing more technological advancements than any time ever in history. And then people think that that's not going to be followed by some of the greatest bull markets. It's like, it absolutely will. I don't know how that's a hard or controversial thing to bet on, but some people think that it is. And yeah.
Yeah, that's one of the best things about holding Palantir is, it's not the only AI company out there. So don't think for a second I'm saying this, but they do a really good job of telling the story of the impact the AI is having on their individual on their company, yes, but on their partners. And I think there's a lot of companies out there that struggle for that. Part of the reason is some of them are just still trying to figure out how to have that ROI on the AI that's implemented, and they're trying to do it with technology that's not as good as Palantir. Others just struggle with the storytelling. They struggle with the narrative aspect. Even though the technology is there, the results are there, they just don't have that down. And there are some that do a great job of pushing this narrative through. This is one of those slides from their earnings, and they've had something like this the last few quarters. There's one other slide I'll show you from this too. And at every AIP con that they have, and it wouldn't shock me if they have another one before the end of the year. Um, they might have even announced it this week, and I missed it with all the other announcements. They have their clients come out. They invite them to come out. They don't pay them anything, and they love telling this story of the impact that Palantir Technology has had on their company. So, we have here Associated Materials implemented over 10 business use cases in just 9 months with Palantir, increasing on time in full delivery rates from 40% to 90%. Trinity Rail built an AIP inventory workflow in 3 months that generated 30 million in savings and improved operating margins. Here, this is Tampa General Hospitals. They've been a partner for a little while. They actually announced a major extension at the previous AIP con, not the most recent, but the one before earlier this year. And this is probably the second fastest growing vector that Palantir's in, is in the healthcare industry. We're getting patients home faster to their families and back to their lives. We've reduced the length of stay in the hospital by 15% for patients with sepsis. So this is not only good because it saves the patient money, it also frees up a bed for the hospital, and it reduces, the risk of being infected or developing sepsis in the hospital. So it's great for everybody. We see a 100% FTE efficiency over this. We've seen an increase in our overturn rate that we expect to result in 13 million in revenue. That's Jody Cohen, Dan Klein of Aramark. Within 9 months, automated product classifications for 99% of mill data elements, driving significant time savings and enabling deep analysis. And finally, Nebraska Medicine, another healthcare. They have a lot of partners in this industry. Nebraska Medicine has seen a 2,000% increase in discharge lounge utilization, freeing up beds earlier for patients and decreasing time from discharge order. One other thing that I'll show on that, and they show like the military impact and everything too. It's right here. The acceleration. And this is really because of the change in their strategy, but also the adaptability of that technology that is backending this. Is, it used to be that they would have these incredibly long sell cycles, and they'd have, of course, the 4 deployed engineers go out, and these would typically run over a year, maybe a couple of years, and may not actually result in a partnership. They still do that, but they have a lot of these through boot camps. And so this is a bottled water manufacturer that they don't name, 50 days to a 7-figure ACV deal. And it just shows that the enterprise-wide contract is in discussion. So net dollar retention has increased to 118%, and it probably will continue to accelerate based on remarks, based on contract expansions like Wendy's that happened this week, which is, I think, the third largest co-op in the United States as far as ordering food. Another healthcare provider, you see that. I won't read that off, in agriculture as well. I actually was very pleasantly surprised with the hyperscalers. They normally do a pretty good job of kind of selling the market on the AI technology, and note the impact that it's made in partnerships. I was afraid that this quarter that there would be the beginnings of an AI fatigue wave where people, you've seen some of it where people are like, when are the results actually going to hit? There's been this huge expense in the H100s and all this other technology and energy and R&D, and we just haven't seen the ROI yet. Well, we've seen some of the first fruits of that, certainly with Palantir, but with some of the hyperscalers and others that are implementing AI technology. But no, this, like you, Tevis, and I talked about this more than a year ago. We called it the new Roaring 20s for a reason. It was in one of the after hours chats that we have. Um, we're not wrong in that. Kathy's not wrong. Just the market can be very short sighted and forget that for some time. And then it can be looking too far out in the future and kind of forget, like, there's a lot of years between now and the reality of that happening. So this is one of those times where I think the market has woken up and said, okay, yeah, it's real. We're buying.
Yeah. Yeah. And it's only going to continue. Well, it is a big balance, in my opinion, between, you know, all the bullish growth that can happen, but then how much, eh, you know, like correction is there going to be in terms of companies like Klarna saying, "Hey, we can get rid of half of our workforce by doing this with AI." Uh, what was it? Anthropic came out and said, um, I think it was to the Washington Post or something, or New York Times or something. They said we can replace 100% of your workforce, something like this. It's just a little crazy to me that if this continues in that sort of pace over the next 10 years, it's like, I don't know. You need consumers to buy the products, but the consumers are going to be replaced by, the AI software or something along these lines, whether it's robotics or something. Um, that's going to be a tricky balance. So I think that that'll be the next big sort of conversation to be had. But yet, in getting there, a lot of money to be made.
Yeah, that's one of the reasons why for me it's a lot easier to see the next 5 years versus the next 10, because on the first next 5 years, I think
That's
most
interesting.
of what we see from AI are going to be very, very good things. But once we hit year 3, year 4, that's when people have to start figuring out, is like, okay, if AI results in whole industries being disrupted and a lot of people losing their jobs, which is a possibility. It's not the goal of AI, but it is a possibility. We have to figure something out there. Whether that's UBI or whatever, that's a political discussion, and that's something that people can debate all day. But you, but on the short term, like over the next 5 years, very, very clear that this is infusing caffeine into our economy as a whole. And of course, I'm not just bullish on Palantir as a stock, but like as far as like a company, what it's doing for all these different industries, like it's not just Palantir either. Like the great thing is, as Palantir has success, gets all these huge deals, makes a ton of money, there's other people that will want to enter that market. And competition for countries is an incredibly valuable thing, because if there's all these tools out there that are not costing an arm, a leg, and a kidney, that help really accelerate businesses, like, man, it's a great time to be investing in the United States
Yeah, I mean, that's definitely for sure. Most of my money is in the United States and then a little bit in LATAM, but
and
I don't think
Canada.
I have any other international money other than that. And the only way that I'm playing international is in the stocks that I have that are US companies that have international revenue.
You got one international Canada company.
Yeah, but I look at that as a United States company anyway.
It basically is. I mean, like,
Yeah.
who are we kidding? They should just come on down, bring you with them, pack you in their bags, and there we go. Welcome to
Yeah.
the
I
United
don't
States.
even look at he's talking about Shopify, by the way. But
Yeah.
yeah, it is always funny that whenever you hear people, and I saw that on Brad Freeman's post a while back, and he said, "What's your favorite international stock?" And I think one person said Shopify, and he was like, "Okay, not Shopify." like, is that even an international business? Like it's weird to think of that as a non-US company, even though they are based out of Ottawa.
Ooh, I
But
did want to ask you about one international company too, if you have a few more minutes.
sure.
Mercado Libre posted earnings. They seemed good. Do you own any Melly, and are you interested?
I do own Melly. Um, I was going to buy more, however, I haven't because I haven't looked into their quarter a lot recently, just because there's been a lot of news and I've just been working. Um, but yeah, I mean, from what I saw in a quick glance, is that they had some credit problems, and people are not excited about the lowering of their net interest margin on their loans that they have. But a lot of this is also a shift, similar like Nubank. They're shifting the type of credit that they have, bringing down their overall net interest margin, but a lot of that is because they're just looking for more volume, which exploded this quarter.
Yeah.
Um,
It's a
yeah,
little different, but it's similar to what PayPal has undergone with Braintree. They have a lot more revenue coming in. It's a lower margin, so there is a trade off. But I mean, in net, like it gives them more money, so that's not bad.
yeah, yeah.
There is some risk though, but
But whenever they show it in like a literal line, like the problem is that with Melly, they show it off as net interest margin after losses. And if you look at it like this and it's going down, people think, oh, losses, when really it is sort of a mix shift change. And that is a similar feat with Nubank. They're just better at describing it, in my opinion. Not that there were no problems with Melly. They definitely did miss on their numbers, but
right.
I need to do more looking into it in terms of why and whether there was some different changes there that I haven't seen. But I am a shareholder in Melly and was looking at adding, but I wanted to do a little bit of DD before I did that.
Yeah, makes sense. I saw the dip, and I'm like, okay, they've had a really really good year. They're up now 22% on the year instead of 40%. Uh, if you guys haven't seen the price stock, I mean, they need to do. I don't know why they haven't done this yet. Maybe but they've not done a split. Yeah, they're trading at, if you throw that up there, Tanner, 1872 a share. So if you love to sell covered calls on your position, maybe you're loaded and you're doing it on Belly, but otherwise, I don't know anybody that would be doing that.
Yeah, can
Do
you
you,
just
do
go to
you know
the
why that they haven't split yet?
Can you go to the 5-day chart? No, I don't
Yeah,
know.
yeah. Let's go
It's
5
like
days. It shows, yeah,
Chipotle.
this.
But I even if you
Oh,
go to the actual dip, because I was like the dippiest part of the dip.
sure, down
Yeah.
17%.
Yeah, I was looking at them at like 17 in the 1700s. So seeing that it's already at the 1800s, I haven't even been following it. I might FOMO in and buy a little bit before it hits 19.
Oh, yeah, and that's a good thing to maybe, like, end on, is it's been a while other than individual names that I feel like, 'cause, a lot of this rally last year was heavily concentrated in, the hyperscalers, some large tech, and, Palantir, and this year, it's, somewhat been them. Palantir, certainly. NVIDIA has just, like, been killing it like always, and, it's broadened out a little bit, but now it feels like I mean, we may be off to the races at some point over like the next, 3, 6, 9, 12 months. And so some of you guys, this might be your like first time in, if this happens, like an everything up type of rally, be very careful of FOMO. FOMO is a real thing. Do you ever get affected by FOMO, Tanner?
Um, Only on things I would say that I should have known. I get kind of beaten down. Like if a stock runs up, like I can't think of an example. Like I guess Hims, for example, but I'm not really following the company or Palantir, especially. I don't see FOMO. I don't get FOMO because I couldn't
Yeah.
see it. Whenever I see a play and I was contemplating and I had done the due diligence and then it runs up and I didn't buy, that is whenever I kick myself. But do I follow in like a scared person? Not really. Mercado Libre is already a position on my, uh, in my portfolio. I've been holding them for a while now. Um, so I say FOMO, but really, like, I, yeah, I like the company already.
Yeah, so FOMO, I mean, everybody has their own trading style. It is easy in an everything up rally, especially if you're looking at your results this year and you're like, "Hey, I'm not it's not where I want to be." And you're seeing these massive like upstart 40% gains and you're like, "Hey, maybe I'll go into that." Be careful. Don't be afraid to take profits. Know what your goals are, know why you're getting into a stock if it's just a trade. Stick with it as a trade. Don't make it an investment unless, something in the thesis changes like it did with Robinhood for me and I'm like, I got to be in this long term. But otherwise, just have your goals, stick to those. If you want to risk some money on some high flying stocks, a Palantir and Upstart in the short term, do that. But just be careful to not like keep doubling down and doubling down and doubling down because that's when you can really, really do damage to your portfolio. And it could work out. Just make your plans preferably before those positions and stocks start running. So if you're like, oh, I always wanted a position in Amazon, Now's not a bad time to buy. It's an all-time high. Jeff Bezos didn't crush it under 200 again. But if you're looking at gains and you're risking money that you need in the next 3 months, probably don't do that. Uh,
Do you ever
yeah.
find that some of the advice that you say or some like goes on deaf ears?
Yes.
Because I think people learn over time in their investing journey. A lot of people sometimes get burnt and then they never get back in, or for an extremely long period of time. But I think most people, I find with retail, even people that I've had conversations with for years, like, I mean, even very close family members of mine, where I try to tell them these things and they just do not learn at all and fall into the same mistakes constantly over and over and over. And they don't want to do the due diligence and they just want the gains and they just want someone to tell them what to buy and they want someone to point the finger at to tell them why it went down. Uh, yeah, I don't know.
Yeah.
Silly. So I guess to add on to your thing, I just say, like, if you want to buy individual equities, there's a lot of work to with that as well. So then you actually know what you're buying. It's definitely not a free game. And if you don't want to put in the work, buy indexes and just relax.
Yeah, I was at my previous employment. This was, like 2 years ago. There was a lot of people, actually younger than you, as their first real job. I was training them and everything. We'd have meetings, and it's like, before we begin, let me just encourage you guys to take advantage of the matching as far as retirement, and be investing in index funds. If you don't know what you're doing, just do that. That's the only thing you could do through the matching. And I was telling him, I was like, look, the stock market has been down for a while. It's going to probably post a new all time high in the next 3 to 6 months. And it did. It's been a lot higher since then. And I know for a fact that some of those folks actually listen to me and thank me. And they're like, hey, I had no idea the stock market was doing that. A lot of them, in one ear and out the other. I'm 20 something. Like, I need the extra money right now. If they had done that, like, they'd be up so much right now. And if this feels very much like 2020 to me, where maybe not quite there, and we don't have the free money, the liquidity, and it's a different environment. But as far as where we are in the market, that this bull run is still feels very early. These can last like 5, 6, 7, 8 years. I don't know that it'll last that long. Maybe we have 6 more months. Who knows? But it feels like 2020 in that there's so many people that are on the sidelines, not as far as like leaving money in the money market and the big players. They're aware of what's going on, but average everyday people that have no idea that the stock market is putting an all-time high after all-time high again and again. They're missing out on all these rallies. They might see like, oh, Bitcoin hit a new all-time high. That's cool. But they're not at the point yet where many of them have come into the market. There are a few new folks, but a lot of them have not. Usually when they start coming in, that's when we get towards the end stage of that bull market rally. Not always, but usually we have 6 to 12 months left at that point. And for me, I hate seeing people hurt, but that's when people that are brand new to the market, that have seen that they've missed out on all this, and they're like, oh wow, over the last 3 or whatever years, stonks only ever go up. And so they just throw money in some names that they maybe recognize that have flown up a lot. And they're like, it's up a lot, it must keep going up. You can make out with some money, but you got to be careful. So put in the work, figure out your investment style, figure out your goals. Only risk money that you're comfortable actually losing, because we never know when a bull market's going to end. It always, it takes everybody by surprise. I mean, so few people always see it, but most of us are like, nope, wall of worry, bull market just keeps going up. One of these days it'll end. So just don't get hurt. Make your goals and enjoy. Long SoFi. Oh, maybe different discussion.
Long markets, long term
Really.
investing.
Long U.S. economy. Like, if you don't know what you're doing, you want to invest. It's money that you can afford to not have over the next 5 years. Just put it in S&P 500 or Nasdaq. I'm a Russell 2K if that's your thing too. That'd be fine. And it's invested in America. The American economy is going to be very good. And honestly, it's not just because of Trump. If Ms. Harris was elected, American economy would be very good. It would still be a place I'd want to be. So it doesn't matter if it's a Democrat or Republican. I mean, it does, but the results are almost identical. I've looked at some studies. it doesn't make much of a difference. You want to be long in innovation. You want to be long in the strongest economy in the world. That's where we are right now. So yeah, enjoy.
This may be your show, Roy, but this is my outro. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But
Buy index funds for now, maybe.
for now.